Welcome to this deep dive. Today, we're looking into Prestige Holdings Limited, or PHL. They're pretty much the dominant restaurant management company in Trinidad and Tobago, and really the English-speaking Caribbean. We're talking 137 restaurants.
And they're very much in the news right now, aren't they? Subject of that big takeover bid by Agostini Limited.
Exactly. That bid really puts a spotlight on them.
It does. And when you look at the numbers, especially for 2024, there's a bit of a surprise.
Right. The revenue growth was, well, modest, but profitability.
Huge leap. Massive surge, actually. So, okay, let's maybe dig into that a bit.
Sounds good. So PHL started way back in 1972. And their strategy, it seems, was this very deliberate, sort of staggered diversification, building resilience by grabbing major international franchises over time.
Yeah, not rushing it. They started with KFC. That was 1973, their first big one.
Then came Pizza Hut, TGI Fridays for that casual dining spot.
Right, covering different segments.
Subway, too, they've got 47 of those. And more recently, Starbucks entering the coffee market in 2016.
So they got quick service, casual, coffee. Pretty much all the key bases covered. And the scale is impressive. Over 3,000 employees.
Wow.
And here's a fascinating bit of history. They weren't just importing brands. Their KFC franchise actually introduced the first drive-through service in the entire Caribbean and Latin America.
Seriously, when was that?
Way back in 1980.
Okay, so that changes things. They weren't just managing, they were innovating operationally, setting regional standards decades ago.
Precisely. Which brings us to the money story for fiscal 2024, because it feels like, well, a bit of a contradiction.
Oh, so?
Well, group revenue, as you said, modest increase, just 1.6%. It hit TT $1.35 billion.
Okay, 1.6%. Not exactly setting the world on fire growth-wise.
Right. But then look at profit before tax, the PBT.
That jumped. What was it, 20%?
A significant 20% jump, reaching TT $100 million.
Okay. Low revenue growth, soaring profit. What does that tell you?
It screams efficiency. It tells you this is a mature business, laser-focused on operations, controlling costs ruthlessly, and basically squeezing more value out of every dollar they already make, not just relying on opening new doors.
Makes sense. That efficiency focus led to an 18% rise in earnings per share, too, right? So good news for shareholders immediately.
Absolutely. But the question you might ask is, how sustainable is that if the top line, the revenue, isn't growing much faster?
Yeah, exactly. Are they just cutting costs, or is there investment for the future?
Well, management seems confident. Look at their capital expenditure. It jumped significantly. Went from TT $57 million in 2023 up to TT $102 million in 2024.
That's a big increase, almost double.
It really is. And that signals they're putting serious money back into the business, improving assets, probably planning for future growth, not just sitting back.
And the foundation looks solid. Assets, net worth.
Very solid. Total assets are over TT $900 million. And total equity, their net worth, is around TT $374 million. Stable footing.
Okay, so pulling it all together, what's the picture here?
You got a stable, very experienced, highly efficient market leader. They know the quick service sector inside out in this region.
And they're optimizing like crazy while also reinvesting.
Exactly. Which explains why a company already seen as an investment of choice is now attracting this very motivated takeover interest from Agostini. They see the value there.
Right. A story of efficiency paying off, but with an eye still on growth. So let's leave you, the listener, with a thought here. We know PHL's success partly comes from adapting global brands. Think KFC's hot and spicy chicken, a local favorite they developed.
Localization is key for them.
So the question is, how crucial is that kind of localized adaptation versus just sticking to the international standard for dominating markets in other sectors across the Caribbean? Something to think about.